This is Alan Bush with ADMIS. In the stock index futures, we are seeing good gains this morning, much of this linked to better than expected economic reports, not just here in the US, but also from China. Overnight, China announced that their manufacturing output increased. That's starting out the day with some strength in stock index futures. Additional gains with the 7:30 US economic reports, with jobless claims down 9,000. Also, we had the 9 o'clock economic reports on balance coming in stronger than expected, with consumer confidence at its highest level since February of 2008. So gains in stock index futures right now, but I think that this strength will probably not follow through as traders look beyond today's economic reports and focus more on the fiscal cliff that is ahead of us, not to mention the earnings situation, with earnings for the most part coming in somewhat weaker than expected, with outlooks downgraded for the fourth quarter. So from here, I would expect a lot of these gains to be given back in stock index futures today. Over in the foreign currencies, seeing the euro currency a little bit better, being supported by higher stock index futures and the better economic number out of China, and yet the euro currency really not keeping pace with stock index futures. They normally trade in tandem. The euro currency only a little bit higher. So from here, I would expect lower prices for the euro currency, even though we are higher on today. Also looking for lower prices in the British pound, even though that currency is a bit stronger, and the Canadian dollar and the Australian dollar also a bit better. I think we'll see pressure developing into today's close for those two currencies as traders refocus on the weakening global economy. In the credit markets, this market holding up very well in spite of a lot of bearish news. Not just the Chinese economic news that was bearish for the credit markets, but also the U.S. economic reports, which were on balance rather bearish for Treasury futures. And yet they're only a little bit lower. I think traders are looking ahead to the fiscal cliff and prospects of a weakening global economy. So from here, even though credit futures markets are weaker, I think we can close higher on the day. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.